Hi, and welcome to the weekly market update for the week of November 2nd. I'm Dennis Morton here with Cody Demel. How are you, Cody?
Good, how are you?
Great. Since this is a slow news week, we thought we'd touch. What a crazy news week. So this is the morning after the election yesterday, first Tuesday in November. So we're going to give you a couple of updates on what's happening in the markets, both leading up to and coming out of election day. We're also going to talk about fickle rotations, just this change of leadership that's happening between different markets, different asset classes, and what that means. And finally, we're going to talk about the four most dangerous words in investing. This time is different. So let's start with where we are this morning. So Cody, how about an update on what markets are doing coming out of the election yesterday?
Yep. So we're seeing a good rally so far today on the market side of things, especially in the NASDAQ. So in the tech-oriented positions, we're seeing a good rally, which is obviously a good thing to see. Hopefully, the decrease in volatility that we will hopefully sometime have soon from the outcome of the election will help with the market moving forward.
Sure. And we've been discussing a little bit about, we know things are going to be different. In fact, we don't know yet, what the dynamics is going to be in the Senate. We don't know yet who's going to be the president. Hopefully we'll get some answers on that sooner rather than later, but some things are going to remain the same. And we talked about where that burden lies. Some people woke up today and they're still going to have some responsibilities. And we're talking about you, Federal Reserve, right?
Yeah, exactly. So that's one of the articles that we looked at from the Wall Street Journal. They were talking about how the election is still leaving the market in a suspended state because as of now, we still don't know who the president's going to be. And it looks like there's going to be a split government in the House and the Senate. So they're thinking that it puts a lot more weight on the Federal Reserve to possibly have to put more stimulus and leave rates lower for longer than initially thought.
Right, because if we're looking at a Biden presidency with a Republican Senate, then there's that conflict that might hinder the opportunity for more stimulus. Same thing, Trump presidency and a Democratic House, then we're not. That's what we've had for a while now, haven't been able to get a second round of stimulus. So the Fed's sitting there saying, all right, what tools do we have? Do we have any tools to continue, keeping everything afloat? And all that kind of coincides with rising cases, and just the other uncertainty around the election, possible policy changes and things along those lines. Also, the NASDAQ rising today pretty sharply. And that's something where some of that is just where the momentum has been. So to the extent people were getting out of that sector, out of technology and communications in the month of October, which was a down month. Maybe they're flooding back in, kind of chasing back after performance. But it's also maybe potential for getting out of the crosshairs of regulation. That's been a big, some of the antitrust momentum towards some of the major players like Amazon and Google. If that risk subsides a little bit, then that's definitely a tailwind for them.
Yeah, I think that's a really important aspect with if we do have the split government, that the risk for that deregulation, for the regulation on the tech side is definitely a good thing.
Yeah. So we also pulled a piece from Schwab's Liz Ann Saunders. She wrote a piece that used a great term, fickle rotations. And we've been talking about this for a couple of months. Each week to week, month to month, you could point to small caps are doing better than large, values doing better than growth, and just this alternation back and forth between different asset classes. And even last month, tech sold off. It was leading the way down as much as it was leading the way up. What did you see in that piece, Cody?
Yeah, so I thought that was a really good piece that was talking about the sell-off that we had last week until today, and that it wasn't just about the election. It was about how there was obviously no relief that was passed. There was the virus uptick. But I thought that honestly, the most important aspect out of that I picked up was the ratio that they were talking about between the put and calls options on the VIX, which is a risk indicator of the stock market, was at all-time highs. So what that means is a lot of the hedge funds and private equity are placing bets that they think volatility is going to go down, which is a good thing.
Right. It tends to happen. We heard it a lot from clients. There was a build up to the election, like is something bad going to happen one way or the other on that day? And the implied volatility was getting higher. And it's good to see that there's another side to that. But also, Liz Ann points out that the speculation can get disrupted by any number of things. The market kind of builds up on euphoria and people feeling really good. And really by the end of August, it was just a market that you had to be in. And then that euphoria gets deflated every once in a while. And it's not that any one thing is going to disrupt the whole scenario, but when you start getting increase in virus cases, lack of stimulus, and political uncertainty, something's going to take the air out of the balloon. That kind of feels what happens, and then it gets reinflated again coming out of this as we get closer to certainty on the other side. And the other thing about that fickle rotation is that it's really hard to judge how well you're doing sometimes, because you can be really right for a day or a week or a month, and then equally wrong on the other side. So we have to have that discipline to say, okay, I understand that these things are going to peter back and forth.
Yeah. I thought that was I think her last statement. She was saying how important it is to have discipline, diversification, and rebalancing. I mean, the volatility that we've had over the past year, I mean, even past couple years, all three of those are very important and will be going forward too, for that exact scenario that some months tech is going to be up a lot, some months small caps are going to be, so trying to time that would just be very, very difficult.
Yes. And the last piece I want to point out, this was actually abridged from a podcast recently, so the Masters in Business podcast on Bloomberg. Ray Dalio of Bridgewater Associates, great thinker, great writer, one of the most successful hedge fund managers out there. If you haven't picked up his book, Principles, really good read. But he has a new book coming out in January, and it's on history and history long form, kind of the rise and fall of empires. It seems to be the theme. And he spent most of the podcast talking about history in an interesting way, because his contention is that the things that we often say are unique or unprecedented are actually just things that haven't happened in our lifetime. But historically, they have happened, but maybe on 100-year cycles or hundreds of years cycles. So when he talks about great powers rising and then being challenged by other rising powers, that doesn't happen all the time, but it has happened before. And I think certain times there are things we expect to happen once a year or once every 5 years. Once a year, we're supposed to have a 10% correction in the market historically. That even more frequently than that sometimes. Every couple of years, we're supposed to have a 20% correction. Every 6 years, we have a recession. Those kinds of cycles. But then there's bigger stuff that takes longer. So Cody, you've been in the business for 6 years now. You've been an advisor for 6 years. What's something you've seen happen twice?
So since we're around the election, I think that's probably the biggest news headline that's happened twice. I mean, back in 2016. Everyone said how it was going to be the biggest election and everything, and the market was going to sell off depending on who won. We've done okay since then, and I mean, people are kind of saying the same thing for this election, and I'm sure we'll be fine going forward too.
Right. Yeah, and it's one of those things where if you've seen it before a little bit, you can kind of give some context and understand it. But we have 30-year-old investors right now who've never seen inflation in a meaningful way. Whereas their parents or grandparents would say, oh my gosh, I remember what interest rates were, what inflation rates were in the 70s and all those things. And then there's even longer form things like that. We talk about 100-year events, whether it's a pandemic or a flood or something like that. There's enough things that happen every 100 years or so that we're likely to experience one of them every once in a while, and sometimes them in the same year. So Dalio's point is, just because something feels unique or it hasn't happened recently or in our lifetime doesn't mean it's impossible. And we have to think that way when it comes to investing, especially when we get into places like rapidly expanding federal balance sheets, just diverging socioeconomic trends, those types of things. So check out the interview, Ray Dalio on Masters in Business from Bloomberg. We're heading into November. Daylight savings time just kicked in. Exercising is about the only thing I think, kind of that keeps the energy going these days, especially as the days are getting shorter. What's your exercise routine looking like these days, Cody?
Yeah, so I try to work out every day. Unfortunately, it doesn't happen every day, but I try to go to the gym right from work. Look, I go to the gym downtown, which is really nice. They take our temperatures before we go in, ask if we've traveled at all, and they wipe down all the equipment. So I feel really safe going there, and it's a great workout place.
Yeah, I've tried to build in a little bit of variety. I'm typically a workout from home guy, so I've been trying some different online routines. Took up boxing recently, so there's nobody on the other side, so it's just me sparring against the air. But it's been helpful. So I've never done a boxing workout. It's kind of a good time to take that up. You get a little cardio and get a few swings in. So maybe I'll ask Santa for his feedback. See
There you go.
All right. Well, if we can be of any assistance, if you have any questions, feel free to reach out to us at any time. We hope you and your family had a nice Halloween and preparing for Thanksgiving season. And we'll catch up with you soon. Take care.